Hi guys, welcome back to the channel. The last 2 weeks have been tough for the markets and some of my top holdings really took a hit. For example, Nebius dropped 25% just in the last week and is now down 40% from its October highs. And this happened across all the neo cloud companies. CoreWeave is also down 25% this week and more than 60% from its highs, and Iron is down 25% this week and 40% from its highs, just to name a few. Things didn't go any better for IMS either. The stock is down around 40% over the last month, even after posting a strong Q3 and launching lab testing only a few days ago. But as you've probably seen, this trend is affecting the entire market in general. The only holding that actually held up in my portfolio was AMD, which managed to finish the week in the green after announcing incredible estimates during its analyst day. But the truth is this crash isn't due to any bad news about these companies. Their investment thesis remain intact, actually stronger than ever. Nothing has changed in their fundamentals. The main reasons behind this sell-off are: first of all, despite the government shutdown ending, the White House said that many economic data points, like inflation and jobs data, especially for October, may be permanently lost. Investors are worried that not having access to these numbers means flying blind, and that this could cause the Federal Reserve to not cut interest rates in December, a cut that many had basically taken for granted. In fact, the probability of a December rate cut has dropped from 80% 2 weeks ago to around 50% today. The second reason behind the sell-off is the concern that valuation of big tech and all AI-related companies have become too stretched and extreme. The massive capex increases announced by Microsoft, Google, Amazon, and Meta made many wonder whether all this money being spent on AI accelerators will actually translate into real economic returns. Many investors were alarmed by Mark Zuckerberg's words during the Q3 earnings call. "I much prefer being ahead than behind. I'm worried that if I don't invest now, I won't have enough capacity later, but I can't necessarily fully map out how it's going to work on the other end either." In a few words, Zach is saying that he will keep investing hundreds of billions of dollars even without the certainty that this will lead to a huge increase in Meta's profits. This pushed many people to think that this overspending might simply be a huge gamble. Personally, I completely agree with what Lisa Su said talking about this increasing in capex. I don't think it's a big gamble. I think it's the right gamble. We can definitely see that more computing and more investment equate to a faster pace of innovation. Think of computing as equating to intelligence, and if you can get more intelligence, why wouldn't you want more computing? She also added that the exact timing of ROI is where things become less clear, because we don't know if it will take 12 or 14 months or whatever. But she also added that big tech companies are extremely disciplined companies with strong balance sheet, so they can afford to take this huge bet. And the reality is that we are already seeing an increase in productivity and in value delivered to end customers. Even though hiring, especially among big tech, has slowed, revenue and profits continue to grow. Just think that in the recent Q3, S&P 500 companies beat Wall Street expectation at the highest rate in years. I think since 2021, the first year post-pandemic, where we saw amazing growth year over year. If you have a long-term horizon, it's impossible not to be bullish, in my opinion. Technology keeps improving, and even if we never reach the super intelligence dream, AI use cases will only continue to expand. Models will get more powerful and go far behind simple text, like ChatGPT. Think about Sora 2, the video generation model launched by OpenAI about a month ago. It saw record downloads and consumes far more compute than ChatGPT or any other LLM. We are entering the era of agents, where AI will take real actions for you, not just suggest what to do. And many enterprises are still using AI in a very marginal way. The reality is simple. Compute demand will keep growing exponentially for the next decade. And one basic fact, AI models are seeing explosive user growth. And we are not talking just about ChatGPT, which now has more than 800 million monthly users. We are also talking about Cloud, Gemini, and many others. And this shows people are directly experiencing productivity gains, which is the only reason why people are using those tools more and more. To confirm this, during AMD Analyst Day, Lisa Su said she expects the accelerator market to surpass $1 trillion by 2030, and that AMD data center segment will grow at an 80% annual rate until then. And to show how extreme chip demand is becoming, Elon Musk recently said, "One of the things I'm trying to figure out is how we make enough chips. Even when we extrapolate the best case scenarios from our suppliers, TSMC, Samsung, and Elon also said that they are probably going to work with Intel. Even in the best case scenario, it's still not enough. So I think we may need to build a Tesla terafab, a gigantic chip fab, because I don't see any other way to reach the volume of chips we are going to need." To me, that makes it crystal clear that chip demand will skyrocket. Even Elon says he has no idea how to secure the number of chips he needs, it becomes almost impossible not to be bullish. Speaking of compute capacity, all the hyperscalers, Microsoft, Amazon, and Google, and even neo-cloud companies like Nebius and CoreWeave have said that they have sold out all their capacity and expect to remain capacity constrained until at least 2026. So it should be obvious at this point. Even if many AI companies have been hit hard recently, their thesis not only remain intact, it's actually getting stronger. I truly think this drop could be an opportunity to buy these names at very attractive prices. In the past few days, I posted on X a video where Jeff Bezos talked about how Amazon stock crashed by 95% during the dot-com bubble, going from $113 to $6, even though all of Amazon business metrics were improving during that period. This shows that during big bubbles, fundamentals often disconnect from stock prices. History repeats itself. The key is not to chase stocks, but to buy them when the business is exceptional and the price isn't too high. Personally, in recent months, I start to think that many stocks have grown too fast and too aggressively, and that a correction will eventually come, probably in 2026. And I'm pretty sure about that because not only is the US economy slowing down, with fewer hires and inflation refusing to stay at 2%, but also because the massive capex investments we have seen won't deliver returns as quickly as many investors hope. Like I said earlier, we don't know if the ROI will be 12 months or 24 months. Before the technology takes a bigger leap and gets adopted widely by large enterprises, it's going to take time. It won't be immediate. And I think many people, when they don't see these results right away, will panic and sell. What I was doing with my portfolio recently was increasing my cash position to take advantage of a future correction and build position in undervalued stocks like Novo Nordisk and Root. But after this recent drop, I think I will start increasing at least part of my top holdings again, like Nebius and IMS, while continuing to build my cash pile. Their prices could continue to fall in the short term, but honestly, buying these stocks at $50 or $70 won't make a big difference if, as I believe, in a few years they will be worth $500 per share. One thing I definitely don't intend to do is sell my positions. We are living in the era of AI, and I'm certain compute demand will keep growing exponentially. We are only at the beginning of this cycle, and I have zero intention of missing this train. To wrap up, the market has dropped hard in the last few weeks, but nothing has changed in the fundamentals of the AI thesis. That's why I'm not selling anything. In fact, I plan to increase my position. That's all for today. I hope you enjoyed this update, and I'll see you in the next one.